Hello to all traders and welcome back to another market review brought to you by Orbex. So indices hitting record after record. The S&P closed yesterday at another fresh record high, as well as the Nasdaq. The Dow slipped approximately 100 points, but it is looking on track to possibly have another upside turn as we have it on the chart at the moment on the 4 hour. Now, what we're looking at in the near term is the fact that tech stocks have really been the driving factor for these big rallies on the US indices especially. But we're also waiting for the Fed's next meeting on the 17th and 18th of December to see not only if they're going to have a rate cut, but the potential signal going into 2025. At their next meeting, Donald Trump will be firmly in the White House as he is at the moment the president-elect. He'll be officially inaugurated, and that will give him the 47th membership of the President of the United States of America. So that being said, is the Fed going to hold back on its rate cuts, or is it going to be a bit more aggressive? We'll have to wait and see. But we're seeing at the moment that this in turn has seen quite a big shift on the movement of a lot of the not only indices but the dollar and gold as well. And now we're just seeing, and obviously don't forget Bitcoin that we reported on recently, but now we're just seeing a little bit of a plateau on the Dow after such a surge. Very choppy road at the moment for the Dow, but looking to try and reclaim 45,000. Just mark that on the charts at the moment. So we did touch that recently, but we didn't close above that, which is quite significant. We had a few spikes here and there, but now trading at the 44,000, mid 44,700 area. So with that being said, the Dow's the one to kind of pull back slightly, but on the other side of that, we've got, let's just take a look on the S&P. As you can see here, closing at another record high. It's very important when the indices close. If we just touch a brief record and then start pulling back, it's not really a confirmation, but because the S&P and the Nasdaq have both pretty much closed above a record high, we're now seeing the fact that price action is looking a lot more bullish. But let's just take a look at the path of the S&P for the last few months. And as you can see here, from the bottom out that we saw in October, we've just seen record after record being hit. And obviously with Donald Trump's confirmation that he will be the next president, we saw another lift, big gap in the market there. That's where you're seeing the gap, and then we saw another price movement higher. So how high can we go? Well, it's not really slowing down anytime soon, so we are targeting the 6100 area next, which will be quite significant, because if we do get that particular zone, then we can start pushing a lot higher as well. So there's not really any slowdown or correction on the horizon for the S&P. If we look on the RSI, we are seeing a slight bearish divergence, but we've seen them time and time again. And it might not really mean too much in the movement of the S&P and the indices in general. As you can see here, we've had peaks on the RSI that are above the previous peaks, but there hasn't really been too much of a slowdown, not really a big correction in the market. So we'll wait and see. We did have a bit of an August drop off. If you remember, at the beginning of August, we did have a bit of a drop off in all the markets, but then it nicely recovered to regain momentum. So looking on the Nasdaq as well, we're just seeing the same pretty much slight bearish divergence at the moment, but will it really matter too much? Is it really going to start moving down quite significantly? We'll have to wait and see. But as always, we'll bring you all the latest in the technical and fundamental headlines for all the major currency pairs, the instruments and assets that we trade upon. So stick with us, stay ahead, trade responsibly, and we'll speak again next time. Bye for now.